Last Wednesday's inflation data was the last thing US investors wanted to see. Already concerned with inflationary pressures due to rapidly rising commodity prices and some key data out of China, April's CPI reading was a make or break for the markets. Instead of falling from 0.6% to 0.2% month on month, it rose to 0.8%, hitting an annual rate of 4.2%, more than double the Fed's standard 2% target. To rub salt into the wound, the core reading rose from 0.3% to 0.9% month on month, striking an annual rate of 3% against the 2.3% forecast. All this left the Dow Jones with inflation migraine in its worst daily performance since January, and this just days after it struck 35,000 for the first time. Yet, by the end of Friday, the index pulled off a pretty strong recovery, closing the week at 34,380. It needs to avoid any further inflation wobbles, however, if it is to return to the all-time high struck last week. A set of appearances from various FOMC members could put the spotlight back on inflation and interest rates on Monday, which may not be ideal for the Dow and its US peers. Tuesday cools off somewhat with the building permits and housing starts data. The former is expected to nudge higher from 1.76 million to 1.77 million month on month, while the latter is forecast to drop from 1.74 million to 1.71 million. Wednesday then reveals the latest FOMC meeting minutes from April's get-together, an item that may illuminate the intricacies of the Fed's current stance and how close the central bank really is to shifting its monetary policy. Thursday's Philly Fed Manufacturing Index is expected to plunge from 50.2 to 41.8, but with the day's usual jobless claims reading shrinking from 473,000 to a pandemic low of 457,000. Finally, on Friday, the flash manufacturing and services PMIs are released for May. The manufacturing reading is forecast to dip from 60.5 to 60.4, while the services figure is set to slip from 64.7 to 64.6. So, at least on the surface, nothing in the calendar really to spark a significant rally from the Dow Jones and the rest of the US market. It doesn't help that the week has begun with signs of a slowdown in China. Fixed asset investment fell from 25.6% to 19.9% month on month, while the industrial production dropped from 14.1% to 9.8%. Most upsetting for Western investors, retail sales almost halved, from 34.2% to 17.7%, far worse than the 25.0% forecast. As is always the case, the West would kill for numbers like that. In the context of China's own performance, however, the drop-off provides another obstacle of negative sentiment for the Dow to overcome if it is to return to 35,000. It's tricky to anticipate whether or not inflation will be a key factor once again this week. It sort of cropped up, not out of nowhere, but suddenly at the start of last week, but did have the focal point of Wednesday's inflation reading to really sort of draw focus and keep it in the headlines as the week went on. This week there is a UK inflation reading that may put focus back on the issue, especially since it's expected to rise from 0.7% to 1.4% month on month, which is a huge jump. However, it's unclear how much a UK reading on inflation will impact the overall market and the US markets. But it could be the kind of thing that causes another market-wide wobble as it's sort of further evidence of the inflationary pressures that caused such havoc last week.